Perfect. And then, like I said, we're not that many. So if you have questions, please allow yourself to ask the questions. The idea is, especially when it's a small group, be as selfish as you need to be and try to get as much value as possible from this. So outside the box financing, this is the thing. When it comes to mortgages, there's a lot of different types of loans. However, the traditional loans have the issue that if you don't fit in the specific box that the mortgage company wants you to fit in, if you don't have 2 years of self-employment, if you don't have, if you, for example, just switch from a W-2 employee to a 1099, or if you just switch from a salary to something where your hourly is variable, it's very hard to qualify. So there's all of these other loans that will actually allow you to qualify, and they're viable for all of those clients. And specifically this past year, where there's a lot of clients that have been left behind by the market and have been left behind by a number of things, it's very important for us to have these loans available and to at least know that there's an opportunity for people to qualify with these loans. So who are we talking about? We're talking about self-employed and small business owners. We're talking about people that are recently retired. We're talking about people that just came to the state of Florida or are trying to make the transition to the state of Florida. We're talking about people that maybe just switched their job or industry, people that are transitioning from life events, right? Like retirement or divorcing people. Real estate investors sometimes have a hard time and they have to look at different things like hard money lending, and then seasonal and gig workers, which we have a lot here in this area, people that maybe don't have 12 months in the same job, but they come every summer. And then special property types, anybody that's been doing real estate for a significant period of time here in Florida have encountered things like, maybe the condo is not well reserved. One of the latest ones right now is the insurance with the condos, because a lot of them, because the insurance came in so high, increased their premium and increased their deductible. If their deductible is more than 5%, then they don't qualify for traditional financing. So there's a lot of different reasons why maybe a client that's seemingly is very well qualified, because seemingly they make a lot of money and they can have a good down payment, they still don't qualify because simply, as far as like mortgage world is concerned, they just don't fit in that box. So traditional financing is just strict, right? Taxable income instead of actual income. 2 years of self-employment return and tax returns are absolutely required. Although Fannie and Freddie made a change that starting by next year, they're not going to necessarily require 2 full years of self-employed. They're going to allow people to have 1 year self-employed. But that sounds great, but in reality, they still have a whole laundry list of things that those same clients will need to have. They need to be in the same line of work. They need to be making at least the same amount of money for them to be able to qualify with just 1 year self-employment. No short-term financing. So there's no such thing as, I want to buy this house and sell it in 3 months. Condos must be warrantable, so they need to have a full laundry list of requisites that they need to abide by. They need to have enough room in their budget and all these things. No ITIN or foreign national. So unless you can legally work in this country with either a work permit or with you having been here with any type of work visa or green card, you're not really going to be able to qualify. If you have an investor that wants to close in the name of an LLC, it's illegal to close with an LLC for Fannie and Freddie Mac loans. Fannie and Freddie Mac only allows trust and only allows people like natural people, a natural person. All of them require a down payment. There's no such thing as an FHA with 100% down, with 100%. No, there's always a down payment attached to that, even though 100% FHAs are actually an FHA plus a down payment. And then the sourcing of funds, it's simply a nightmare. That's probably one of the biggest headaches when it comes to qualifying for a house is, okay, where did the money exactly came from? And unfortunately, we need to abide by certain rules where if any type of large deposit goes over a certain amount, we have to treat it almost as money laundering. And we make the clients go jump over all the hoops in the world for them to be able to show us where the money came from. And then we're capped at 10 properties. If you have an investor that wants to buy a bunch of properties right away, well, guess what? With Fannie and Freddie Mac loans, they're only going to be able to qualify for 10 finance properties, and that's it. After the 10 properties, they're not going to be able to do financing. So what happens, especially now, guys, like the market has been very tough right now because rates have been high, there's no inventory, and the decision to buy a house financially is not a simple decision like it was before, where it was a no-brainer to buy a house. A lot of people are waiting and waiting, and they don't know what they're waiting for, but they're just waiting, right? Whether it is for prices to come down, which, you know, statistically they won't, simply because there's not enough inventory, or whether it is for rates to come down, which great, they will come down, but that's also going to push the prices up. So we need to be able to, the few clients that are interested in buying, that see the potential of maybe buying investment properties right now before the market goes up again and before demands go up, we need to make sure that we have a house for all of those people and we have a loan for all of those people. And with Neo Home Loans, we do. So we got you covered. We have non-traditional financing. Now, non-traditional financing are still backed by the bank. So this is not an individual investor. You know, it's not me doing the loans. It's still backed by a bank. So this is perfect for well-qualified borrowers. We can still close very quickly. This does not require a 60-day or a 75-day closing. We can still close within 30 days. They're very consumer friendly. So these loans are not going to have a big balloon after a year or 2 years or anything like that. And the idea is that these loans come in with a common sense approach. We're talking about these kind of loans are not going to be, well, you know, they didn't declare the taxes on this, so we're not going to be able to approve them. And what I like to say is, look, there's traditional lending, and then there's the hard money lending. This is an in-between step, right? If you have a client that we can actually source the money, or we have an idea of that they actually make money because the bank statement is coming in, or we know that they have a good down payment, or for whatever reason, you know, there's something that we can prove, this is a better option before we go into private money lending. This is going to be much better for them. So let me show you what we're talking about. So with traditional financing or non-traditional financing, if we don't have assets, no problem. We have a lot of down payment assistance programs. Okay. You do not need to be a first-time home buyer for this ones. We're not talking about the first-time home buyer down payment assistance. So you do not need to be a first-time home buyer for the ones that we're talking about. You can get a 3.5% or a 5% down payment assistance, and you're gonna have the option for that down payment to be forgivable, meaning you're never gonna have to pay it, or repayable, meaning you have to make a payment, whether it is throughout the life of the loan or you pay at the very end when you sell the property, kind of like the hometown heroes, right? But again, we have a lot of down payment assistance. And look, I always like to clarify this. A lot of people think that down payment assistance is one program. Down payment assistance is, there's a number of programs that work as down payment assistance. Some of them better than others, some of them harder to qualify than others. The ones that we have at Neo Home Loans are obviously the normal traditional ones, like the hero programs and all that. But we also have some that are more aggressive. Some that, for example, you know, don't require you to be a first-time home buyer. Some that, for example, don't have a maximum ratio or a maximum debt to income ratio, and some that, for example, don't have an income limit. So let's go over this again. So no first-time home buyer requirement. We can give 3.5% or 5%, meaning that you can use 3 or 3.5 for the down payment and the rest for the closing cost. All of these down payment assistance programs are only for people that are buying the house to live in the house. They cannot be for an investment property. The ones that we have that are forgivable after 5 years with a 0% rate, meaning after 5 years, you don't have to pay the loan anymore. As long as you live in the property for those 5 years, you're good to go. Or we have a repayable option for 10 years, meaning that you need to keep making payments for 10 years and you're done. We can combine them with FHA and USDA. We cannot combine them with a conventional loan. And the minimum credit score for these loans are going to be 620. Now, like I mentioned before, no maximum ratio, meaning the Hometown Hero and a lot of the down payment assistance programs cap you at 50%. This one doesn't cap you at 50%. We can go over the debt to income ratio, just like on the regular FHA loan. And technically, they work for single family homes, condos, but only condos that are approved by FHA. But what's cool is they work for a duplex and manufactured homes as well. So if you have a manufactured property that you're selling, for example, we have the ability to put together a flyer or put together some type of marketing behind you, showing how somebody can buy it with a 0% down. Same thing with a duplex. If you want to buy a duplex or you have a client that wants to buy a duplex, they can qualify with a 0% down payment and they have no income limits. This is a great option for people that maybe don't qualify for the Hometown Heroes, or let's say the Hometown Heroes ran out of money. This program is always funded because it's an internal Neo Home Loans down payment assistance program that is always funded. So again, when it comes to mortgages, the problem is always income, assets, or credit. So on this one, you don't have assets, no problem. Now, no taxes or no income in the form of taxes, no problem either. We have bank statement loans and 1099 loans. So think of all your borrowers that maybe don't declare a lot of money. Maybe realtors, maybe, people that are self-employed, maybe people that make a lot of tips, right? That they don't declare a lot of money in their taxes, but they put money in their bank account every month. So these loans are cool because we're not going to look at the taxes at all. We're going to look either at 1099 and the P&L, or we're going to look at either 12 months or 24 months of bank statements. So as you can see here, those loans go from $150,000 all the way to $4 million. There's 12 months and 24-month options. So we can look at 24-month bank statements to calculate the income, or we can look at the 12-month bank statements to calculate the income. If you have a client that maybe killed it last year or killed it this year, right? Because we're in December already, but last year wasn't good, we can just take a look at the last 12 months and based on the 12 months, qualify the income. The other thing is we can look at personal bank statements or we can look at business bank statements. Now, if they have foreclosure, short sale, or bankruptcy, we need to wait 2 years. We don't need to wait the 4 years. The borrowers can own as little as 50% of the business. So that's good. So again, if they're not 100% owners of the business, even if they own 50%, we're good. We can allow all occupancies, meaning this works for them to buy a house that they're going to live in, for them to buy a vacation home, or for them to buy an investment property. We have a 40-year interest-only option available. The way that those one works is you get interest-only payments for the first 10 years, and then after the first 10 years, you have 30 years of fixed rates. So if somebody's looking for a much lower payment, the interest-only option is good because again, we can refinance it over the first 10 years without a problem. If it's not an investment property, none of these loans are going to have a prepayment penalty. So there's no worries about refinancing as soon as the rates go down. The other thing is there's an option where we only look at the first page of the bank statement, where we don't have to really dig deep into the bank statement, and there's no self-employed requisite. This is big because most bank statement loans require the person to have an actual business or to be self-employed. We have one where you're not required to be self-employed. It can be a gig worker. It can be somebody that makes a lot of cash, tips, things like that. They would still qualify for this loan. Guys, these loans are great because they're fast. We can qualify the person based on the bank statements. And a lot of times we use it for people that they do qualify for a regular loan, but they don't qualify that much for the house that they actually want. So they end up going with the actual bank statement loans, or people that maybe qualify today with the bank statement loan, but we know that in a year or two, they're going to qualify with a tax return loan, with a normal loan, and then we refinance them. And look, the option or the conversation that I always have with these clients is figure out, because there's always the option of going back and doing the taxes correctly or doing taxes to show more money. They need to figure out what's going to be more expensive, right? Because if they go back and they do 2 years of tax returns at a high dollar value, the amount of money that they're going to end up paying for in taxes, it's going to be a lot more than whatever the difference in rate is between a conventional loan and these kind of loans. And the majority of my borrowers that end up with non-traditional financing because of income and end up having the conversation with their CPA and coming back and decided that this is a better option for them. Because the ones that don't know that this option exists, what they end up doing is they go to their CPA tells them, look, if we do that, you're going to have to pay this much money in taxes. And they just go, we'll just do it next year. And 10 years go by. And these are clients that are extremely well qualified, but don't make the opportunity of buying houses and buying investment properties and amassing real estate because they didn't even know that these kind of loans existed. Excuse me. Anyways, no income, no problem. We have an investment property income. This investment property income doesn't even look at the bank statements, right? The loan is based solely on the cash flow of the property and not the income. And the good thing is the property doesn't have to be rented at the time. So the potential rent needs to be at least 75% of the mortgage payment. Even if the potential rental income is a little bit lower, 25% lower than the mortgage payment, they will still qualify. Now, they need to have a credit score of 660, which is a little higher, and they need to put a minimum down payment of 20%. What's cool is they can also buy in the name of an LLC, just like with the bank statement loan. We do loans up to $2 million with a minimum of $75,000. And we don't need any borrower income or employment information. Even if the person, if it's unemployed, we're not going to have to even ask them what they do for a living in order to do this. There's also an interest-only option if you want to maximize the property cash flow, and there's no limits in the total number of properties that those clients can have. You have a client that wants to buy 25 properties at the same time, no problem. As long as each property, the potential rent of each property is going to pay for at least 75% of that mortgage payment, we're good. The other cool thing is condotels are allowed. Condotels are very hard to finance. Most people end up having to pay cash, but they're very profitable when it comes to the rent. Well, because of that, they're very popular when it comes to this type of investment loans because there's no problem with the cash flow. All right. Still no income, no problem. We have a primary resident vacation home with no income. We don't need an employment or income at all in the application. So it's not even stated because we don't even ask for that. They need to put at least 20% down. Their credit needs to be 680 and they need to, when we can go up to $3 million. Okay. So again, the point here is, guys, if you see the trend on the no income loans, as long as they have a good down payment, we are probably going to be able to qualify them for a house, right? So again, if you find somebody that doesn't have assets, we can go with the down payment assistance programs. If you find somebody that doesn't show any income, as long as they have a solid down payment, that's probably something that we can work. Fix and flip loans is one of the most popular loans we've done since the last hurricane. The fix and flip loans are cool because they're very, very fast and we can close and compete with cash buyers. We do advanced draws available. We can do up to 30 units when it comes to these loans. The payment is going to be only on interest only payment, and the minimum amount is going to be 75,000, and the maximum is going to be 2 million. We can go over 2 million, but then we need to really, the underwriter is really going to review it for an exception. We've done exceptions up to $4 million, but their sweet spot is between 75,000 and $2 million. The loan, like I said, is interest payment only. 50% faster construction draws, meaning, you're going to get the construction in about a week, which normally takes a long time. And the minimum credit score is 640. These loans are cool because we don't look at income at all. We just look at the project, right? So we take into consideration the credit score, but even if somebody has bad credit, they can bring somebody else on that has good credit and that's going to work. And what we're going to focus on when it comes to the loan to value and the down payment that the person is going to have to put down is how many fix and flips they've done in the past 5 years. So if they've done 0 to 2, they need to put 20% down. If they've done 3 to 6, they need to put 15% down. And if they've done more than 7, it's as little as 10% down payment. These are great loans, again, for your investors, or again, if you have a property in the market that needs some work, we can put together something with a fix and flip loan, and it's again, it's a great opportunity right now, especially with unfortunate with properties that maybe were in a natural disaster and haven't been fixed yet. All right. Foreign national loans. Foreign national loans are for all of those people that live outside of the country and work outside of the country. We have a number of foreign national loans, but these are the ones that I like the most. Minimum amount is $75,000. Maximum is 2.5. But again, there's always exceptions for going over. The DSCR program needs to have a 1-to-1 ratio. DSCR is that same investment cash flow loan that we talked about. So the way that we work with people that come from other countries or that live in another country, is we're not going to ask them for a CPA letter. We're not going to ask them to see how much money they make in the other country. All we want to make sure is that the property that they're buying here as an investment makes sense. The property needs to be able to rent for itself and rent for the amount of money that they're paying every single month on the mortgage. This is not going to be 75% like the last one. This has to be a 1-to-1 ratio, meaning if the payment of the property is going to be $2,500, then the potential monthly rent needs to be at the same $2,500. The cool thing is that's all we need as far as income. We're not going to ask them for anything else. Now, because everything's based on the actual property and the assets, the money that they have, we are going to be a little finicky about the assets. So we're going to ask them to have the money here, or at least the money in America for the last 30 days. And we need to source the money for the last 60 days. This is the only way these loans become difficult. These are the easiest loans for us to do because all we need to do is literally 1 month bank statement in America or 2 months bank statements, period. And then we need to make sure that the property pays for itself. Where things get difficult is, I'm from Colombia. In Colombia, we deal with a lot of cash. And when you look at a bank account for most clients, they move a lot of money. We need to make sure that the money that they're going to use for this is going to be able to be sourced for 60 days. Now, the other thing they need is they're going to have reserves for up to 12 months, meaning after the closing, if the payment is $2,000 a month, they need to have $24,000 in the bank just the day of closing. After closing, they can remove that money and no problem. So it's just for us to see reserves the day of closing, and that's it. I want to repeat that. They don't have to keep that for a while. It's just the day of closing. And then they are able to close in the name of an LLC. They have to put auto payment, so they need to make sure that there's auto pay for that property. They need to be able to come to this country legally. Not necessarily the visa, but they need to be able to come to the country legally, because if they're in another country that doesn't require a visa, that's great, but they need to be able to enter the country legally. And the minimum down payment, this says 30%, but it just changed to 25%. So that's good. That's the foreign national loan. The ITIN loan. The ITIN loan is a little similar, but we're going to look at ITINs. Well, actually, it's not similar. It's just similar in the sense of that is people that come from another country. But the ITIN loan, we're actually going to look basically at income. We can go up to $2.5 million on this one. We do require for this to be only primary residence. It cannot be for an investment property. We also allow non-warrantable condos, which mean the condos that don't have enough reserves and things like that. And we require a 25% down payment and a minimum of a 640 credit score. All right. I know I'm 2 minutes past, but real quick, traditional financing or non-traditional financing, other kinds of loans. We have here at Neo Home Loans, we have cross-collateralization. That's a hard word for me, which means I have a property, but I have other properties. So to buy this property, I not only want to do the loan on this property, but I want to leverage the other properties that I own. We can do that. We also do asset depletion. If you have somebody that has a lot of money in the bank and wants to buy a property, but they don't necessarily show a lot of income, we can do a calculation based on the money that they have in the bank. We have an amazing doctor's loan. The doctors probably don't qualify for the Hometown Heroes because they make way too much money. We have a no down payment, no mortgage insurance, and no self-employed or no 2-year self-employed requirement for a doctor loan. We can even take future loans. So it's a 0% loan that goes up to, I want to say, $2 million and without mortgage insurance. We also have bridge loans, so people that are trying to sell a house and buy a house at the same time, for them to not have to go through that process. And recently, we have not only owner builders, but if you know of a small builder that needs financing, we can also help them with the build of the house. Other loans that we have that I didn't put here because I just think they're inferior to the loans that I put in this presentation is we have the 1% loan, which is the 1% FHA where you put 1% and then we can give the rest. The truth is, why would you do the 1% when you can do the 0% one? So that's it, guys. The point of this class is there's a lot of financing out there. A lot of lenders started taking a more common sense approach when it came to financing, especially after the last year. And as long as we can work with somebody that either doesn't have a down payment, but maybe has good credit score and good income, or that doesn't have income at all, but can put a good down payment, there's always options to help them. Please, please, please make sure that before you say no to them, you have them talk to us, because there's a lot of opportunities for us to maybe come in with a product like this and save that deal for you. In addition to that, there's a lot of people that have already been declined by many lenders because most clients go to their banks first, and most banks don't have access to any of these loans, and they've been declined year and year and year after year, and they feel like they're never going to be able to buy a house, and they're not even talking to you guys about buying a house. Well, with these no income loans, bank statement loans, down payment assistance loans, they might be able to buy a house. So make sure that you put some content around this. You talk to your clients around this, because there's a lot of times that when we do our normal presentation and I talk to our clients about all the weird options that we have, they end up telling me, oh my God, my neighbor just told me that they didn't qualify because they don't show enough money in their taxes, or because whatever. I'm going to have them talk to you. So make sure that you keep these loans, and obviously you won't remember them all, but you keep the idea that there's always a possibility, and have us talk to them before. All right, guys. So we are 35 minutes past the hour, which is 5 minutes after. I'm sorry about that. I'm going to stop sharing my screen, and I want to see if you guys have any questions, comments, or anything like that. The chat is working right now, so if you have any questions, please drop it in the chat and I will answer them. So how much is the interest on a fix and flip? That's a great question. So the fix and flip is it's a weird loan because it's going to be based on experience. So it's based on experience. I've seen it as low, and it's high, right? Like I've seen it as high as low as like 11.5% and as high as 14%. Now, I don't know if this is for you, but the majority of my clients are less concerned with the interest rate on a fix and flip loan because they're not going to keep that rate for a long time. They're not going to keep that property for a long time. One thing to remember on that fix and flip is, one thing to know is, there's no prepayment penalty, but there's a minimum interest charge of 3 months. So if the person buys the property and sells it in 2 months, they're still going to be charged 3 months. If the person obviously buys it and sells it in 4 months, they're going to be charged the 4 months. But it's about 11 to 14%. But again, they're not, in my experience, investors are not that concerned with that rate because they're just looking at holding the property for as little as possible. Any other question on down payment assistance programs, fix and flip, no income loans, all of that? What's the payment of $100,000 loans at today's rate? Well, it depends what kind of loan we're talking about. If we take a regular conventional loan, right, and we go, okay, $100,000 loan, and it's a 30-year term at let's say 7.125 interest rate, the payment is $673 a month. So it just depends what kind of loan we're talking about, right? If we're talking about something like a no income loan, the rate's not going to be 7.1. It might be 8 to 9.5%, but there's no mortgage insurance ever. If we're talking about a fix and flip loan, it's going to be interest only. So even though the rate is higher, it's interest only payment. So it just depends. Again, look, just to table this, the majority of these weird loans are going to have a higher interest rate than a loan that's a conventional loan or an FHA loan. But again, that's not what you need to compare these to. You need to compare them with the alternative of somebody that doesn't qualify for a loan today on what they need to do to qualify. That's my example of my self-employed borrowers. And I always have this conversation with them. Don't compare these rates with the conventional loan rates. You need to compare the cost of these rates versus the cost of doing the taxes properly for 2 years, the cost of waiting, and the cost that they're going to have to pay in taxes. That's what you need to compare them with. And again, the majority of times, Uncle Sam charges a lot more than an extra 1 or 1.5% in interest rate. All right. So it is 39 minutes past. If you guys have any questions, please make sure to go to our Calendly link or calendar link and set up a meeting with us. I'm happy to discuss any questions that you have on, obviously, not just our loan program, but everything else that we're doing. Guys, I highly encourage you to come to Content Day. That's a class that we're doing every single month where we put a lot of content around things like this. We do content on how to buy a property with 0% down and how to buy a property and to fix and flip it and things like that. These are hot topics. These are topics that generate conversations, and these are topics that most importantly generate engagement, right? You may not, sometimes we do, sometimes we get 400,000 views, 200,000 views, but most importantly, you're going to get people asking you questions. Hey, what do you mean I can buy with no income? Or what do you mean I can buy without putting a down payment? These are high conversion topics, and we create scripts and we create videos around these kind of topics, right? How to buy a duplex or a fourplex with a 0% down. All of these things are the things that we talk about on our videos, and they generate tons of engagements and likes and shares, and most importantly, comments and DMs. So I highly encourage you to come to the Content Day. We haven't yet released the date for the next Content Day, but I wish to see you there. Okay, guys, if you have any questions, you know where to find us. And I appreciate your time here. Thank you.